Okay, so thank you very much for joining our Business Bites this afternoon. The start of 2021 has been a real challenge for businesses with the end of the transition period, and there's been so many considerations for business, and one of which has been foreign exchange. So today I would like to welcome our corporate partners, AFEX, who offer financial exchange solutions. From AFEX joining us today, we've got Alex Harden, who is the Business Development Manager, and Trevor Charsley, who is the Senior Market Advisor. I'm going to hand over to them in a second, but if you have any questions throughout, please just do pop those in the Q&A and we'll have time for questions at the end. So Alex and Trevor, over to you.
Great. Thanks, Sarah.
Wonderful.
Yes, it's a pleasure featuring on the month's Business Bites. I know that both Trev and I have been quite excited preparing for this. Trev's got some slides to go through. So Trev, as our in-house specialist, over to you.
Lovely, thank you very much indeed. Well, first of all, I thought what would be quite good, first of all, to thank everyone for listening, and also to the Chamber for inviting us on. Just to say, really, just having a look at, how the pound and how the economy's been coping really with COVID-19, and also I won't say the B word, but let's call it the new UK-EU trade situation, trade agreement, and how actually that looks like that's going to pan out over the 6 to 12 months, over the next 6 to 12 months. So I think would certainly be interesting for you, and I'll give you some tangible takeaways from this as well. So just moving on to the first chart, in actual fact, hopefully a picture paints 1,000 words. As you can see, this is sterling against the dollar. And there's a nice little red line going up, supporting the price of sterling against the dollar since about a year ago. And really, as long as that sort of continues to hold, then sterling may well do well. And I hear you ask, gosh, why is the pound going up against the dollar? Well, in actual fact, it's because the government, I think, took a bit of a flyer, took a bit of a calculated risk, let's put it like that. And they said, you know what, we have to get the vaccine sorted out, and we have to get a really good supply of the vaccines and give it to the population as soon as possible. And that's what they did. So, in the short term, the pound is being supported by this vaccination program. And the reason why, really, it's going up is because the sooner we get out of COVID, and the sooner we can get back to normal life, the sooner the economy can start to regenerate. I know very much it'll be very much a different sort of new normal, shall we say, but it will mean that actually probably the vaccination program will mean that the UK will be one of the first developed nations out of COVID lockdown. Wonderful news. Now on the new UK-EU trade situation, there's certainly a sense of relief that we've stopped looking at the House of Commons bickering amongst themselves or discussing amongst themselves. 4.5 years of confusion has finished. We know what we have to do. We've just got to get on with it. Now, it's interesting because there's sort of this relief idea. Okay, fine. Really, the UK is the world's 5th, 6th, largest economy in the world, and let's just get back to it. We can focus on sort of doing business and making some money. However, that sort of idea, I think, could well be a short-term situation, because in actual fact, there is a little fly in the ointment, or rather, it might be quite a big one, because in actual fact, we're sort of looking at, the first trade figures, and they didn't really, for January, and they didn't really make great viewing, unfortunately. UK exports to France fell 30%, to Germany they fell 56.2%. And to Italy, they fell 70%. Now, the market is still pretty positive on the pound. And why is that? Well, actually, the market is guessing, and it's saying, well, we think that January could be the worst month. And we know that business is reactive, and we know that business is trying to sort this out. But let's see, in the meantime, we'll give the UK the benefit of the doubt. So that's the short-term situation. So that's why the pound's going up. And in actual fact, if we can go to the next slide, please. Please, Sarah and Rebecca. There we go. If you can see, you see sterling euros popping up again. There's a nice big horizontal red line. That's sort of at 120, above 120 and up to 121. And I'd suggest that actually there may be some trouble ahead. and sterling euro could actually struggle to get above those sort of that red line. Now, why would it struggle? Okay, well, let's hope that the business sorts itself out and we push forward. But in actual fact, one way that business is sorting itself out is it's sort of sending branches into the EU, or setting up branches in the EU. Now, that means in actual fact those tax receipts will go to the EU, not the UK. The other point is that we have the Holyrood elections coming up on May the 6th. That could spell trouble for the government. It may take its eye off the ball with the rest of the economy, because, of course, if the SNP get in, you may see more uncertainty about referendums, etc. Another one, the EU will not, it won't be bad forever in the EU. They've sort of pulled a bit of a crab, I suppose, in rowing terms, as far as COVID and the vaccination program. They won't do that forever. So we think they'll be coming back to us. So that's why sterling euro may well struggle about, from 118 to 121. So it's a difficult time, really. We can see those storm clouds forming over the next sort of from 6 to 12 months. First 1 to 6 months, should we say? Maybe that's plain sailing. First 6, then after that 6 to 12 months, maybe a little bit tricky. So that's really sort of what we're looking for over the first 6 to 12 months. And what I'd say, tangible takeaways for you. Sterling euro, the EU will probably catch up with the UK. So 118 to 121 could be difficult for the pound to go through. And sterling dollar, as long as that trend line stays in place and price stays above it, then we go higher. If it doesn't, and when it doesn't, we could well be a little bit of weakness there. So that's sort of as far as the economy and the rates. And I'll stop talking and whittering on. Actually, Alex, one for you. I mean, how are you sort of suggesting to clients, and what are you suggesting to clients to help them prepare for these changes in the businesses over the next year? Because there will be changes.
Yeah, absolutely. And I think you've identified a lot of key effects that, with obviously the B word that we would go without saying at the moment with the pandemic. It's overwhelming at the moment, and we get that businesses are looking almost to survive. And I think it's easy to put foreign currency and the effect it has on your business into the too hard basket and to neglect it. I guess my key advice would be just to allocate some time to looking at it, just to really understand how your operations may look in the next kind of 6 to 12 months. Take a view. Speak with an expert. Speak with someone who, like yourself, who looks at the markets and can maybe give a bit more of an idea on where the markets may be. Set budget rate. Look at the products that you're implementing. Check with the bank or whomever you're using to see if you're getting the right pricing. And just do that, whether that's an internal process or whether you do want to look, for someone like AFEX to help you with that. That would be my key suggestion, is just to take the time to look at it. I mean, I think sorry, go on.
No, sorry to interrupt, Alex. I was going to say about the budget rate. Quite often we find clients and prospects that don't have budget rates. And I think budget rates are great because you will know where you are, and it's really, really important to do that. If you know where you are, then you can make a plan and you can go forward from there. So that's interesting.
Absolutely. I mean, yeah.
Any particular ideas? Because obviously I know that you have a lot of contacts with the manufacturing sector. Is there any particular ideas and examples where you've helped clients, in Wales in that sector?
Yeah, look, manufacturing is a big one. Obviously, a lot of import, export within that sector. One that comes to mind, a client, now they are buying their stock from Japan, buying Japanese yen to pay for that, and they're selling in the UK. They're also exporting and selling into Europe, so they're generating euro income, euro revenue. So in the most simplest form, we looked at the pricing they were receiving, and surprise, it wasn't great. There was a huge cost saving that we could provide instantly, so that's tangible value straight away. But more importantly, the business was receiving euros, they were converting them back into sterling and then buying Japanese yen with their sterling. So in effect, there was a double hit on the currency conversion. And when you're looking at 2-3%, it's and you're doubling that, then that's a big hit that you're taking. So what we actually did is we did a bit of cash flow modeling. And it turned out that actually they only needed to bring into sterling from their euro receivables about a third of the amount they were doing. So we sold on a forward contract those euros into sterling, and then with the remaining euros, we put a forward contract in buying Japanese yen. The saving, it was probably on a £3 million turnover business, it was probably about £60,000 over the year. So it's tangible. I mean, that's payroll for 2 of your staff in such a simple format. That was an hour conversation, just digging in and understanding the business and the effects. And as I said, the cash flow modeling. The more certainty you can provide on your business, the better. There's things that can't be controlled, pandemic numbers, for example, Brexit, trade relations, etc. Foreign currency is something that in most cases can very easily be hedged against or controlled, if you will.
Yeah, it's interesting because I was talking to some clients the other day, and they were saying, listen, I don't normally look at foreign exchange that much, but in actual fact, because of it, and this was haulage costs, basically up 300-400% since the start of the year, because I think containers are in the wrong place and they have to come back, and there's a shortage of containers. And they're saying, so in actual fact, we need to look at our foreign exchange because then if we manage it properly, we can actually start to change, to improve our sort of bottom line, and that's something that's really, really important to those clients, to make sure that you can actually look at the budget rate, sort things out, and then you can make an improvement on that and manage it properly. And if you've only got 5% if you only spend 5% of your time on foreign exchange, well, actually, why not talk to an expert? Does that make sense? What do you think about that one, Alex?
Yeah, absolutely. I mean, just looking at sterling dollar in the past 12 months, you've seen an increase over 20%. You're selling your dollars into sterling. That's 20% hit that you business possibly might not be able to take. Then you need to start looking at finding new avenues of business. If you're importing and sterling actually moves against you, it goes lower. We saw last year when it crashed, right? When it went down to 114 or
114,
something. Almost,
I know.
Yeah, almost historical lows. I mean, business. I count on my fingers in the first few weeks of that, how many businesses had to start looking at sourcing from the UK and actually changing really their whole business structure because of foreign currency.
I know, and if you hedge that out, then it's worth it, isn't it? And it's interesting. Sorry to interrupt again, Alex. Sorry to jump in, but in actual fact, normally when we had the referendum, there was like we all thought, oh gosh, okay, we're leaving. 20% down for sterling dollar and sterling euro. Yes, absolutely. But it's really interesting. The 20% we saw previous year basically was just caused on the start of the pandemic, and then in actual fact 20% higher this year. There was no news about it. There was no so it creeps up on you, and I think we urge clients, but please don't let sterling or let currency creep up on you, because it is that sort of thing. Oh, you suddenly think, oh, what's happening with the pound? Well, it's moving, and it's moving today in actual fact with the Bank of England and their interest rates. So there's been some volatility around today. So it's really something that we just urge you just to have a look at and check with some experts. And if they can help you, just put a hedging policy into place, agree your budget rate, and then have some ideas for you. You don't need to spend a massive amount of time, but I think you can get some great value from that. Would that make sense, Alex?
Yeah, absolutely. I just think you really need to address the issue, allocate some time to it. I think if you then implement the right policy or the right strategy, you'll see that time actually come back in tenfold. Same as, look, at the end of the day, businesses want to cut costs. Businesses want to, they want to generate profits, and foreign exchange can impact profits significantly, whether that's in a good way or in a negative way. A lot of people I speak with, small, medium enterprise businesses, something they come up with quite often is, but we're not financial experts. We're selling trucks or we're importing food, and actually we're not financial experts, so we don't want to take the risk of hedging. Whereas I would disagree and say by not hedging, you're taking a huge risk. Look at what's happened in the markets over the last 12 months, and I guess not everybody can hedge, and it doesn't. There's not one solution for all, and I guess that's the benefit of a business like AFEX. We don't offer an off-the-shelf one-fits-all product, solution, or strategy. We understand and get a full unique understanding of the operations of a business, and then we tailor and look to implement something that suits that particular business. Not every business can forecast. Not every business can hedge. There's other methods. Even as you said earlier, the currency at the moment, a 2-3% swing in a day isn't unheard of.
No.
So by transacting and by looking to time your execution, you could be putting 2-3% back in your pocket.
Yeah, no, absolutely. And as you can see, well, hopefully, as you can hear, we're very passionate about the foreign exchange markets. You know what? So with that, hopefully we can help you. I'm seen as the experts around for foreign exchange. But I noticed that we've been talking for nearly 20 minutes, actually, Sarah. So have we got any questions coming in at all?
Yeah, thanks both. I mean, it's clear that you're both really passionate about foreign exchange. And, we, for people who are watching who might have come to our Recovery, Build, Revitalise event back on the 9th of March, one of the points that came out of that is for businesses to Brexit proof is to manage the currency. So it's really good to get some strategy. So I think Alex kind of answered this one before, which was why I work with AFEX instead of a bank. But I don't know if you wanted to add anything else on that one. Alex,
do you want to have a go at that?
Yeah, absolutely. I'll keep it simple and straightforward. We're proactive in our approach. We're more consultative. And look, we want to put money back in the business as much as we can. Not all the time can we beat the bank's prices, but a lot of the time we can, and especially on SME businesses that sometimes aren't looked after by the big banking institutes. So with it, with our product offering, with our our proactive and tailored approach, I think businesses really will see a benefit. For example, our client managers, they're limited to how many clients they can trade. That means that they have an understanding of all of their clients, so that if they see them move in the market, they can be proactive rather than reactive and execution only. There's a whole range of reasons, really, but we've clarified a few of them, and I don't want to keep everyone past lunchtime. So yeah, unless Trev, do you have anything more to add on that point?
I was going to say, Alex, actually, that's the thing. My job basically is to run around, or sit still actually for 24 hours a day, watch the markets, and actually give a heads up to all the client managers and the sales guys, basically just to say, listen, this has happened, that's happening. The Bank of England actually just came out and said that they won't tighten on interest rates before evidence of good progress on inflation. So actually the pound started to slip a little bit this morning just while we're talking. So, it's that sort of thing. And that it's a little, I know a client, they want to sort of sell some sterling and buy some dollars at the moment. Actually, you know what? That news is out. Let's have a chat. Can we get some good levels for them? Can we get a strategy? And that, do you get that? If you get that from your current provider, fantastic. Maybe there's some other ideas that we could provide. But what I would suggest, that proactive, help. We hold your hand all the way through the whole sort of process, and that's really what we're about, sort of thing. So, have we got anything else? Anyone else coming in, Sarah?
Yeah, we've got a couple more. So, first one is, my business is relatively small. Is there anything we should be better doing to manage my FX?
Yeah, look, again,
so for a small business,
it would probably mean having a conversation. Like I said earlier, without understanding the unique needs of the business, I couldn't quite say. But look at your current process, review it for sure, compare your pricing, and just speak with someone. There's no cost in speaking with an FX provider, and get on the phone, allocate half an hour to it, and I think that would be my first foremost suggestion.
Fantastic. I think it's that whole just take a bit of time and sort of really what your business is doing.
Yeah, exactly. I mean, not all businesses have a finance function or a treasury team. A lot of businesses are one or two man bands. It may be the managing directors taking care of the finance operations as well as running the business. So alleviate some of that. Bring on someone that can provide you with updates, provide you with analysis, give you good pricing, and there you go. I think that's more than you can ask for. Saving money, time, and carrying on with running your business, and let someone like us help with the finance function.
Yeah, I agree with Alex. All I'd say, for me, it's a case of getting to a situation. If your foreign exchange is giving you sleepless nights, you need to have a little think about it and help, ask someone, can you help me out here? Because no one wants to have those sleepless nights, and I think no one wants to be surprised by a sudden change in rates. And that's really where we would suggest that experts like ourselves would give you a hand, basically give you some value.
Fantastic. Well, the last question that we've got coming, I think, it's the last one, is a big one. So how long do you think it will be before the economy's back to a sense of normality? And what do you suggest businesses do in the meantime to manage their exposure to risk?
Oh, Trev, I think that might be one for you there with your crystal ball.
I thought we'd finish off on a meaty one before everyone goes.
Thank you very much. Thank you, Sarah. So it's going to be interesting. The government has actually turned around and said that they think they're going to be, or it's Bank of England actually saying they think they're going to be back to sort of pre-pandemic levels 2022. We're going to be a little bit behind the States. They actually, Morgan Stanley, one of those big American investment banks, they say the American economy is going to be back to pre-pandemic levels this month. Wow, they spent so much money, but we shall have to see. They didn't, they haven't got as much lockdown as us. But certainly, hopefully by mid-2022, things will be to a new normal. That would be great stuff. And hopefully we can pick things up from there. And it's interesting, the backdrop is that the government is trying to change many things and many sort of economic circumstances. So it will take time. However, in the meantime, managing exposure, you could actually say, if you think, 2022, I'm not really so sure. I don't want to hedge out everything, all of my foreign exchange exposure to 2022. Why don't you just do the 3 months? Just say, let's just sort of give me some sleep, some certainty for 3 months. In uncertain times, give me that certainty for 3 months. And then actually I'll hedge everything for 100% there. And maybe when I look at 6 months, I'll maybe do 25% there. And then just increase it as it comes forward. So you get like a rolling hedge. And that means that you actually improve the rates that you're getting through the marketplace. And actually also, it means you've got that certainty. And really what I do think is that when you get a correct hedging policy in place, it's buying your business time. It's not saying, I've sold at the high of the month or whatever it is, or I've bought at the low of the month. It's about buying your business time. Because what we did find with the 2016 referendum, in actual fact, clients who'd hedged, so all of a sudden they thought, okay, fine, I've got a price here, maybe things have improved on the foreign exchange, so I can give a discount to my business, or actually I'm struggling on this side of the business, but I know that my hedging is fine, so I've got time to change other parts of my business. I can maybe go into another market, I can maybe try and, shore up the market that I'm in, give some discounts or do something, but it's bought your business time. And that for me is the most important thing. It's not really about, the highs and lows. It's about time, because if you've got time, you're all good businessmen and women. You know what you need to do, so you've got that time to do that. Fantastic, and that's the whole idea. That's what we try and get with our clients. So hopefully that was is that okay for you, Sarah? Would you do that?
This is why I sit on the marketing and events side of things, and I'm not the person who does.
Just okay. Jumping in there as well, Trev. I think you also raise a good point, and I just think it's worth elaborating on the hedging side and the fact that I know a lot of businesses maybe have hedged previously, maybe as a standard forward contract, maybe as an option product that went wrong for them. And it's vital to know that there is such a variety of products out there. So please don't, if you've tested the waters and you've gone into a product that didn't work for you, please do not think that should be the end of your risk mitigation or hedging policy or approach for your business, because there are so many different ways to structure products that can fit in with your business. So I think that's key to know. Okay.
Sarah, anything to add at all?
No, I think that's all of the questions that we had submitted from the audience. So thank you so much, both. It's really good to have you both here this afternoon, and to kind of pick your brains about foreign exchange and to give businesses some strategies of what they can do. With tangible, things that they can do for their business to save them some money. So thank you very much, both. If you'd like to get in touch with either Alex or Trevor from AFEX, Their contact details were up on the screen previously, but do get in touch with us at Chambers Wales as well, and we can get you a direct introduction to Alex or Trevor as well. So we will be back after Easter with the next of our Business Bites sessions. So thank you very much for joining this afternoon, everybody. Have a great afternoon. Thanks. Bye-bye.
Thank you, everyone.
Thanks, everyone.
Thank you.
Bye.
Bye-bye.
Bye.